Welcome back to Kicking with the Rickens. We are redefining retirement, ladies and gentlemen. I'm your co-host, Doug Turnbull, here with Heidi Ricken-Provost and her pa, Gerry Ricken here.
Yeah,
let's go. We're ready to party here as we get deeper into this tax diversification explanation, all the syllables. You can get in touch with Ricken Financial on way more than just taxes, any facet of your portfolio or retirement at rickenfinancial.com or calling them up 314-442-6476, the pride of St. Louis. Ricken Financial here. Heidi, Gerry, how we doing today?
doing great.
We're doing very well, It's a beautiful day. The sun is shining. It's winter, but it feels like spring.
It's unbelievable.
Oh, it is, and the sun shines extra bright in St. Louis because we talked last episode about your involvement with Cocktails for Camp, helping out the childhood cancer families going to camp, and of course that is close to home with Mary Beth having perished from brain cancer there, and you want to pay that forward, and now you're getting involved in something new as well, Gerry.
Ronald McDonald House has been around for a long, long time, Doug, and we have a couple of them here in St. Louis, and one of them is just down the road from us. And we had the opportunity to make a meal for the families staying at the Ronald McDonald House. And it's just, it was so rewarding because, having been through that, struggles with your child being sick, you just don't have a whole lot of good meals. You're always eating on the fly. So the Ronald McDonald House does a tremendous they provide a tremendous benefit for these families. They can shower there, they can sleep there, and they can eat there. And Heidi and I had the opportunity to go in and make some of, Gerry's famous burgers there.
It may have been winter, but the sun was shining, and we were grateful for that. So, pulled out the Blackstone and made some smash burgers because we looked at a lot of what people have been feeding them lately. And yes, it may be comfort food, but sometimes you need a little protein in there too. So
that's right. There's only so much mac and cheese.
I know, right? But hey, I got to say, it was pretty nostalgic for me because my senior service project, my senior year of high school, was at the Ronald McDonald House before this beautiful one got built. So, yeah, it was pretty cool to be on the other side of the equation, too, and see the families in real time. Because what I did in the past was cleaning the rooms when people were moving out, so they never really saw us. But they do some incredible things for our community, and we're very grateful that we had this opportunity to help out.
Everybody listening in here, we know we've got people listening all over. And here's your call to action, okay? We can tell you to go sign up Ricken Financial, and we'll do that later. All right, here's the deal. If you've been touched by something, someone's helped you, or there's something, the pastor of my church has asked, what breaks your heart? Mm-hmm. Go find what that is and put a little extra time, a little less time on the couch and a little extra time into that. The Ricken family does that, all right? So be sure to do it. They do it helping out the Sibs camp, the Rainbow camp, and also helping out Ronald McDonald House. And really, we should just call it a podcast there. We do have some business to take to, guys, and that is tax diversification. Last episode, we talked about tax loss harvesting and municipal bonds, the pros and cons of those two, and the right ways to finesse it, and really why you need advisors to help you out. In this case, well, we're really getting into an area I just am eager to learn because I don't know anything about installment sales and cost segregation. So take it away. What do we need to know, y'all?
Well, first, before we get into it this time, we're going to do our little PSA here. This episode may or may not pertain to you. Everything we talk about in tax diversification is so personalized that when you listen to this, you're like, would that be something I can benefit from or not? And if you need more information about it, please feel free to reach out to us. That's exactly what we're here for. You can take a look at rickenfinancial.com, RICKEN, or give us a call at 314-442-6476 so that we're always around here to help you. But these two topics we want to cover today, really, most of it will pertain owning a property or a rental property or a business. Mm-hmm. But there's cost segregation really has a lot to do with rental income, and installment sales can be from selling a piece of property or a business or whatnot. How do you diversify the taxation on that?
So let's just get into it. One of the things that we want to talk about is installment sales. And these really don't apply to a lot of people unless you're selling a business or a piece of property.
You have to have something that's highly appreciated for an installment sale to make sense.
And in an installment sale, what we're doing is we're spreading the tax over several years on an installment basis. So that's why it's called an installment sale, because you're not getting all the money up front. You're getting it over a period of time. So Heidi, why don't you talk about what we did recently?
Yeah, because why would you want to get the money over a period of time versus right away from the beginning? Well, You got to make sure, first of all, that you're working with the proper attorney to protect yourself in an installment sale. And we'd be happy to connect you with someone if you need help there. But once the contract is written and you're protecting yourself and you agree upon a number, what we did recently is someone said, okay, hey, I have this piece of farmland in my family. We never thought we'd sell it, but someone came in and they want to offer me a lot of money. And why not take advantage of it while I'm living instead of passing it on in the future? And, the kids will probably sell it in the future anyway.
And this farmland was highly, highly appreciated, Doug. It was, I think they bought it for about $112,000. And we're selling it for, put another digit behind that. So,
wow.
Yeah. So, at that point in time, if you get that full amount day one, the biggest beneficiary of that's going to be the IRS and your state that you're in and or local municipality. And so when you take a look at a highly appreciated asset that you sell like that, if you can take that gain over time and you can sell it over time versus 100% day one, you can keep more money in your pocket by diversifying your tax risk over the course of time. So what this particular client decided to do was we ran a lot of different iterations of tax returns to see, okay, here, forecasting out the future, how much should you get paid each year so that it makes sense and you can save on some taxation here. So over 18 years, they're going to pay, a set amount each year for this farmland. And at the end, he got the right attorney to write his contract. At the end, he relinquishes control to the buyer.
Oh.
But over the course of time, he's making some money now and paying the smallest amount of tax possible on the full sale. So what you do is you get to take your gain in an installment year after year after year. And the money that's coming in and being paid to him, a portion of it will be in the form of interest. So that's ordinary income. But the rest of it's capital gains. And, you get to save on some taxation by taking the smaller amount of capital gain each year. Because if you remember what we talked about earlier, your capital gains rates go up as you make more money. So,
Sure.
He gets to pay that smaller capital gains rate while selling off a very highly appreciated piece of property and using the funds to do something else that is creating tax-free income for the future too.
So would the buyer then have to agree to pay smaller amounts over time, or does the money do they pay it all at once and get put in an escrow account?
No, they pay it over time. They pay it over time.
Okay. So in a way that could be beneficial, and maybe we're getting too far out of the lane here, but it could be beneficial to a buyer in they're getting to buy it like a mortgage, but without a bunch of interest on it because it's helping both sides out.
Yeah, I mean, you're kind of on the right track. It's almost like a seller-financed mortgage when you do an installment sale on a piece of property like that because, you get to pay over time as the purchaser, but as the seller, you get to accumulate your funds over time and pay less tax in the grand scheme of things. And how else does this apply?
And the other thing, that happened in that specific transaction was he wanted to protect us from future income tax. So we actually developed some tax-free plans for his grandchildren. So we can get into that in a later episode. But it's just, we can do so many creative things in the tax law if you just talk to us. And the way you get a hold of us is 314-442-6476.
314-442-6476. People write that down, tattoo it on your carrier pigeon or whatever it is. Okay, you need to call and talk to people that have seen this a bunch of times. And then you made a clear delineation between this and cost segregation, right? And because one is involving sales, one's involving rentals, correct?
That's exactly right. We have several clients, a lot of clients actually, who own rental property.
Sure.
And they're always coming in and saying, oh my gosh, what can we take as a deduction this year? And a lot of them, none of them.
So often people think you have to spend a fortune and take money out of your pocket to put it into your rental so that you get a deduction of some sort. And I'll be honest, I was in the same boat before I did some more research back in the day because I own a rental property and I thought the only thing I could write off outside of your normal, 27 and a half year depreciation was what came out of my pocket to pay the expense. So what do you do, Dad?
Well, you can cost segregate your property, Doug. So how do you just mention 27 and a half years? The tax law says And one of the greatest tax benefits of owning a rental property is the fact that you can depreciate that property on paper, take that as an actual deduction without it costing you any money, any cash, okay? You don't expend any cash to get that deduction. It's called depreciation. You depreciate that over 27 and a half years. However, there is something called cost segregation. When you think about a building, you think about a rental property or think about a rental home. Okay, that rental home has the structure. Say it's a brick home. That brick will last over 27 and a half years. So you depreciate that piece of your property over 27 and a half years. But you can segregate the different pieces of your property. The windows have a different useful life than the brick does. The doors have a different useful life than the brick does. Your
the
HVAC.
Appliances, yeah.
Your appliances, the HVAC system. All those can be depreciated over shorter periods of time, which increases your taxable deduction, which saves you on taxes.
I see. Okay. And so each one depreciates differently. Therefore, you could get different tax benefits based on that different depreciation.
That's exactly right.
Of course. And since it's depreciation, you don't have to come out of pocket to be able to write more expenses off against your rental income. So just another way to make a little bit more, in the grand scheme of things, because when you're renting something out, really your goal is to make some income off of that. But, if there's a way to reduce the taxable income within the confines of the tax law, why not take advantage of it? And you might be sitting here thinking, well, how on earth would the details of that work? Or, okay, I own a commercial rental property, commercial real estate. How could I utilize that? Or
Same concept. Concept.
Or, you might be sitting here thinking, okay, I've had this business for, 36 years and I'm getting ready to sell it. How could I take advantage of what they're talking about here? Like, would an installment sale work on that? Whatever your situation may be, chances are we could have a great conversation and open your eyes to some tax diversification or some tax saving strategies that you might be able to implement for your future to be a little bit more tax efficient. So if you're sitting here having any questions about whether this might pertain to you or how you could implement any of it, give us a call at 314-442-6476. Check us out at rickenfinancial.com, RICKEN, and just reach out. It's worth a complimentary consultation to see if any of this could help benefit you for your financial future.
Because the tax law changes by the day, and it's very, very complex, and it's very, very convoluted. And if you don't know that there are opportunities out there, you can't take advantage of those. So we want to make you aware of those opportunities.
That's such a great point, is that, look, Heidi, you said it a few moments ago. You're in the business and didn't even realize what you had under the hood as far as rental income and tax write-offs. Okay, so certainly you all listening are probably not as proficient as she is. The people in the industry don't know, and that's why Gerry and Heidi both, they go to seminars, they travel, they network with other people, and they learn more and more about the business, and then pay that forward, just like they do with their charities, to you, to help you. So get that conversation started, 314-442-6476. And if you go to rickenfinancial.com, you'll see links to Facebook, Instagram, YouTube, all the other ways to get in touch. Now, before we let you off the hook here today, there's something coming up at the end of the month here, March 25th and 26th, Heidi, that I know is close to your heart too.
Absolutely. And that is a women's only seminar. So one of my life goals is to make sure that every woman feels empowered for their financial future, because when you look at the statistics, less than 20% of women feel that they have the knowledge database to take on their financial future. They don't feel confident about their financial future. And we want to change that narrative. So come hang out with us. We have a couple nights at Trattoria Toscana, which is at Lindbergh and Gravois. And we'd love to hang out and share as much information as possible so that you feel more empowered to handle your financial future. And you can find all of that information on our website, rickenfinancial.com. If you go to the events tab, you'll see what we're doing all the time and see if there's anything you might be able to join us at.
Sure. And if people want to sign up, they could just contact you the same ways that they wanted to do the complimentary call with you all too, to get started on the portfolio. So that number again, 314-442-6476. So you've heard about and heard defined today, installment sales and cost segregation, all right? Just 2 more tools in the tax diversification toolbox. Go back and listen to the first, I think it's 4 parts of this series here to get, I think 5 parts, first 5 parts of the cities to get studied up. And we've still got another 2 parts left to go here as we're right in the meat of tax season. Well, Heidi, Gerry, thank you so much for enlightening us. And again, we look forward to learning more, y'all.
Hey, our pleasure.
Absolutely.
The pleasure is mine, too. Thanks to our producer, Brandon Benefield, for getting this all put together. And for everybody listening here to Kick It With the Rickens, we thank you all for making this a success. And we are just so thankful, and we look forward to you tuning in again. But before we sign off here, we got to remember, Gerry, every day
It's a holiday.
and Heidi, life is short.
Laugh hard.
And you know we do. Get in touch with the team again at rickenfinancial.com. I'm Doug. He's Gerry. She's Heidi. Thank you for listening to Kick It With the Rickens, Redefining Retirement.
Insurance products are offered through the insurance business Ricken Financial LLC. Ricken Financial LLC is also an investment advisory practice that offers products and services through Impact Partnership Wealth LLC, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Ricken Financial LLC are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Ricken Financial LLC is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Ricken Financial LLC.
Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA.
Tax preparation and tax advisory services are offered through Ricken Financial. These services are not offered by IPW and are not subject to investment advisor requirements. These services referenced are an outside business activity not offered through or supervised by IPW.